Hi all. Today I taken up technical analysis as a topic for explaining it. There are some four types of technical analysis which I'll be explaining in this today's session. One is trend-based analysis. Second one is Ikumocha chart, which is the base of technical analysis. Third one is the Elliot wave. Fourth one is Fibonacci retracement to arrive at the target and the stop losses. For doing the intraday, you need only 3 to 4 days of a data that will do. And for a positional, you need a hourly based and day based kind of a chart is needed. To start with, I'll be explaining on whole India for a trend based analysis. So as I explained, 1, 2, 3, 3 days data, I'll just take it up. I'll just draw the trend line. You can see it here. The simple trend line connecting the tops of the peaks and the bottoms of the peak, I arrived at these numbers kind of. The moment it start trading above the trend line, we take it as a long. The moment it start coming down the trend line, we take it as a short. Your stop loss will start with the trend line itself. And then what are the targets once you arrive at that? Since it started going up, R1 is a target, R2 is a target, R3, R4, R5 kind of a thing is a target. Once it moves to R2, the stop loss will become R1. Once it moves to R3, the stop loss will become R2. Once it moves to R5, our stop loss is R4 will become the stop loss. That's how you keep moving the stop losses. And to pass through each of the resistances, R1, R2, the candle need to pierce through a bullish engulfing candle. That is an indication of continuation of a trend. Now, I'll be explaining in the same chart how the Ikumocha will also arrive at the same logic kind of a thing. See, here is a very simple thing. I have enabled the Ikumocha chart. See, in the 5 minutes candle, in the 15 minutes candle, it should be above the cloud. That is a first typical indication to take up the long position. This is a conversion line. So the candle will touch the conversion line. It will never come down the conversion line. If it comes and touches the baseline, that is a stop loss hit. There you have to book the stop loss kind of a thing. Till it touches the baseline, you can keep holding the long continuity, as well as you can keep a watch on RSI divergence kind of a thing in the screen, what you're seeing. There is no divergence arrived. Tomorrow also you can hold it long. In the candlestick also, there are two types of candlesticks are available, plain candle as well as the weighted average candlestick, that is Hikinashi we use. Both one and the same, whichever the thing is convenient, you can go ahead and use it. There is no hard and fast rule. This is the only rule works kind of thing. Then the Elliot wave, we choose the extended Fibonacci. See, we go here, that wave 1, wave 2, wave 3 is what it is formed kind of a thing. Here is a third wave. Again, RSI divergence is the end of the trend here. And for the Fibonacci retracement, the last one which I was, last technique which I was briefing, see here is the level. So you can keep the 0.786 and 618 as a targets kind of a thing. If you move it little bit down, the next 0.786 will come here. So if you move it little bit down here, again the R1, R2, R3 levels are all one and the same. This is an example for the long side. In the same line, I'm taking IndusInd Bank for the short call just to explain how the trend is working. I'm disabling the Ikumocha chart. See, I'll be drawing the trend line. If you see here, the bottom trend lines are connected. The top trend lines are connected. If the stock start trading above 1255, then it is long. If the stock trading above 1224, then it is short. What are the targets for this? Trend line is the stop loss, is the first stop loss, and the S1, S2, S3, S4, S5 are the target levels. Here, S3 it stopped and it taken up the turn, so you can book the profits here in this point of time. Now, I'll disable this particular, this one, points, pivot points, so that next I can show you the same logic for the Hikinashi chart. See, it came down below the cloud. You went ahead and shorted with a bearish engulfing candle which is coming up. Conversion line, it is keep touching, the baseline is above. So you can book the moment it came out of the conversion line, you can book the profit kind of a thing. There is here also RSI divergence has not come. There is a high possibility the same trend may continue for tomorrow also. But tomorrow again, please remember, do not continue with the existing trend lines, all those things. You have to redraw the trend line. Like just to give you an example, here it is. This is a trend line. Your long positions will vary based on this. So you have to keep like this. See, the next, the one which I did not explain here, it is Elliot wave. See here, A, B. See, 1.618 level is the final target. It's exactly arrived kind of a thing. Now I'll be explaining on how the Fibonacci retracement works kind of a thing. See, 0.786 level is the end of the result, both the things. So in the end of it, what I'm trying to say is whether you use a trend line analysis or whether you use a Fibonacci technique or whether you use a Elliott wave, all arrive at the same value and was stop losses and targets. Hope you understood what I'm trying to say. Thank you very much.